Hello, this is Robert Miner with Dynamic Traders Group with this week's DT trade strategies for the week beginning this Monday, June 22nd, where we briefly take a look at a couple of markets that are coming into a position for specific trades. Even if you don't trade the markets that we take a look at in these weekly trade strategies videos, what you learn you can apply to other markets and other time frames, and learning how to trade, make practical trade decisions is one of our objectives. If you like what you hear in these videos, check out our DT reports at dynamictraders.com, where you can get a trial from $19 for 1 month and get all the daily reports, updates, our weekly videos, our trade tutorials, etc. Okay, let's get started. We're first going to take a look at one of my favorite markets to trade, and that's the euro. Great trading vehicle because it frequently gets in positions where we can identify technical position with a high probability outcome, and that's our objective as traders, not to forecast, not to be right about the future, but to identify a trade setup where we can take advantage of it with acceptable capital exposure. So even if we're wrong, the loss is fairly minimal and we can continue on for the next high probability setup. So here we are in daily data with the euro, and we've been coming down from the June 10th high in what is potentially an ABC correction. Notice I say potentially. You never know what the market's going to do and what position it's in. So what we do is we can just identify the various technical conditions that have a probable outcome. So we've been down for about 7 days. The DT oscillator has been oversold for 4 days or 4 bars, and that's usually about the maximum before it makes a price reversal. So we're right near the extreme of this momentum cycle to make a price reversal, which should be a low. We also have 2 very key time factors this coming Monday and Tuesday. Monday is the high to low. That's usually the maximum on any time frame before we have a reversal. So we would typically anticipate that we would make this daily low, which should be a corrective low on Monday. And we have one other time factor on Tuesday, which is the 100% alternate time projection of what I got labeled as a wave 2, and that's on Tuesday. Now, if we look at all the corrections since the March high, we had 6 days down, 8 days down, 9 days down, and Friday was day number 7. So that means on Tuesday is going to be day number 9, which also should be the maximum time before we complete a corrective low. So we've got 2 key time factors. There's others, but these are the 2 most important to complete at least a daily low Monday or Tuesday. And because of the pattern of a potential ABC correction, is that more than likely it will be a corrective low. What follows a correction? Well, it's a resumption of the trend prior to the correction to a new extreme. So that's not a forecast that the market's going to bottom and then continue up to take out the June high, but it's in a position to do so. So our trade strategy is we want to be oriented to the long side and identify a specific trade setup with acceptable capital exposure to enter long early next week. So that's what we're looking at. By the way, we're right near the typical end of wave 4 retracement zone, which is the 38.2% to 50% retracement, and just a little bit below Friday's lows, the 100% alternate price projection of the wave A from the wave BI. So we've already reached the ideal price zone to complete an ABC wave 4 corrective low. I'm going to take a quick look at the 60-minute data, the intraday data. Again, potential 1, ABC for a 2 or B, and then this is the potential wave C. And just taking out Friday's high is a definitive pattern reversal signal that the low is complete. And if the short-term low is complete, it means the daily low is complete, which means this corrective low should be complete. And we would typically then continue to advance above the high. Now, intraday on Monday or Tuesday, we might be able to identify a setup to go long before we take out Friday's high. So that's what I'm going to be focused on beginning Monday morning, actually, is identifying a setup to get long to participate in a potential advance to a new high. So if nothing else, let's go back to the daily. We should be making a daily low, and what follows the daily low is typically 3 to 5 days of net bull trend. So we may not even continue up and make a new high, but I want to position in the event that we do that. But we should have at least a 3 or 4 day low. We should be net bullish for 3 or 4 days once we make the daily momentum bull reversal, or just any higher daily close. So that's what we're looking at. I think this is a fantastic setup in the euro. Hopefully you take advantage of it as well. Let's take a look at one more market. By the way, if you subscribe to one of our DT reports, we update many, many markets every day. So we do more comprehensive videos on the various markets and the ideal trade setups that are coming day by day, as well as we have weekly trade strategies tutorial. Our objective is not just to identify trade setups, but is to teach you how to trade high probability outcomes. So check out our DT reports. Here's crude. We want to be aware that we should be at or very near a weekly high, and that should be followed by a correction lasting several weeks. The DT oscillator or weekly momentums have already made a dual look back bear reversal on a couple of weeks ago when we had the snapback reversal week from near the 50% retracement. So more than likely, if we haven't completed the weekly high, we should within the next couple of days. So here we are with daily data. The daily momentum, only the fast line has reached overbought, but that's warning that we're within a day or two of completing a daily high. So we just want to look for basically the next lower close on the daily data will probably complete that daily high, which should coincide with a weekly high. I'm going to go to some intraday data here. Here's the 240-minute data, again coming off the June 7th high. We had a 5-wave decline, and that is a signal that more than likely we've completed that weekly high, and the higher time frame trend is bearish. We have a potential ABC correction coming into Friday's high. That'll only be confirmed if we trade below, this would be Thursday's low at 37.40. But whether we make a new high or not early next week, any reversal and trade below 37.40 will indicate that the weekly high is complete. We should be sideways to down for at least 2 to 3 weeks, and we should reach at least, typically at least, we would reach at least the 50% retracement, which is around 30.49. In other words, about a $9 or $10 drop from where we're at now over the next 3 to 4 weeks if we confirm that reversal by taking out Thursday's low. So be aware of that. Certainly if you're long, you want to protect your long, get that stops pretty close to the market, because we're near extremes of when we would complete and confirm a weekly high. And you can also think of entering on the short side for a potential, let's just say kind of minimal $8 to $9 decline, potentially again over the next few weeks. And even if it's not that much of a decline, we at least want to get on the right side of the market, which is probably going to be net bearish over the next 2 to 3 weeks. Well, that's it for today. Take care. Have a fantastic weekend. And next week, check out our DT reports. Check out one of those trial 1-month subscriptions. Keep safe. Miner over and out.